So we're working in a world of imperfect information. We're never going to have that information, so we have to get very comfortable with the uncomfortable. That's just been a theme through everything I do in venture, living with the daily uncomfortable nature of lack of information and clarity. And we have to be really good at sitting in that and making decisions in the midst of that maelstrom.
Hi, Christine. It's such a pleasure having you on the pod today. Thanks for making the time.
Thank you, Pat. It's great to be here.
I'm very curious, how did you actually end up, in the world of venture and in LatAm, out of all places, right? Where you've been for many, many years, investing actively in Latin American entrepreneurs.
Well, it was not intentional, I can say that. And I think I love these journeys about how people get into VC because there is no straight path. And I originally am from Silicon Valley, sort of grew up in the mecca of venture capital, yet it was never something that I thought I wanted to do, nor was it my calling in life. And really, I got into VC when I saw how the VC model could be a catalyst for sustainable change. I'm Cuban American, and my first exposure to Mexico was when I was working out of a consulting firm recently out of college, and I had the chance to lead a nonprofit, the Guggenheim Foundation, working with street children and artists, extremely impactful, extremely important work. Yet there was no way we could sustain the organization without having a recurring funding model. And so for me, that was the crux. There are incredible individuals doing incredible things. Latin America is a place that is entirely capital scarce. That continues to be the situation today. I went back to business school to learn how to run for-profit social enterprises, or sort of like high-impact enterprises. Venture capital impact investing did not exist at that time at all. I had the fortune of having the chance to work at Google, starting out as my summer internship between my first and second year at business school, and I got to be part of Google the summer it went public. I got to see such transformational impact organizing the world's information, and had a chance to go work abroad in France and see how it just changed the world. That was sort of, for me, it was the combining of the two worlds, technology and then bringing together capital and what you can make with change. So fast forward, I had the incredible fortune of marrying a Mexican and having an inside peek into what was going on in the business world in Mexico. And by the time I was ready to launch my own company, I was reintroduced to the founders of Ignia. That was the first impact investing fund in Latin America. Now, Ignia was started in 2008 in a very different world. I mean, this was a year when, the iPhones were just coming out. Like there was nothing like we can imagine today, but it was doing incredibly important work. And it was sponsored by the Omidyar Network, large development banks, the IFC, IDB, the Rockefeller Foundation, JP Morgan, who believed that change could happen in Latin America, but you needed to do it locally. And so that first impact fund was all about figuring out how to deploy capital, how to find entrepreneurs, how to help them grow and scale their businesses. But you have to think about back then, there was no one else doing this. And so we think about what it takes to get a company from angel investing to seed to A to B to C to these big exits that we sort of imagine today. Well, that was just, it didn't happen. There was like one or two checks in town. And really, when you would talk to people about the opportunity in Latin America, they wouldn't have any idea. And so Ignia was a pioneer, and where really things began to take off and change in our world was that in 2016, we raised the first venture fund for Ignia. And that was backed by primarily the Mexican pension funds, which was a huge step for them. They had to actually change Mexican legislation in order for them to make these investments. And for me, it was personally in my own journey, it was when I made the decision to realize that I am entirely driven by the change that I can make and by the impact I can have with my time. That impact is most done through people. And I think that is my greatest skill and asset that I can bring to this. And it was a real revelation. Like, venture is not just about financial reengineering. It's not just about building great businesses based on the numbers. This is actually entirely driven by the founders and teams they build and the visions they create and the markets, and they can see the unseen. And when I realized that we can have a role as a VC fund to support those individuals and help them in any way they may need help, may it be through a check, but also through all the other support that comes with having us partner with these founders. That's where I found my real drive, motivation, passion, commitment, and love for this industry. So in 2016, we raised that first fund, $100 million. And since then, we've been backing more and more founders, originally with a thesis that was backing Latin American founders. And then it really expanded to realize what we most care about is we want to bring the best technologies, services, goods, companies in to serve the Latin American consumer. Because what we know is the end consumer. We know the market. And you've done incredible interviews. I think you've done a very good job outlining the opportunity that exists in the Latin American market. One of the largest consumer markets, the most highly unattended, the most capital scarce. You can go on and on, all the pain points. The pain points here are very real. And so if we can bring the greatest technologies and founders to this market and help them really launch their products here, that's where we'll create the most change. So that's where Ignia has evolved. And so with our latest fund, we've been very much focusing on finding those global founders that can come to Latin America. That's a lot I just threw out at you, but happy to jump in or go in whatever angle you're in.
I see a lot of dots connecting, also quite some parallels to the story of Endeavor and how Linda started the organization in LatAm even earlier, where we had to go kind of the nonprofit route first, and then Catalyst came into the mix later on. And it's just fascinating to see that how venture is a people business. And you come from this impact angle, but then eventually graduate into the for-profit side, but the impact is still the same. Just briefly deviating and riffing on that piece, I had Alex Lazarov on the pod, and we talked about Ignia, right? And I have had folks from Kona, of course, and Flourish. So a lot of funds that are on the impact side. How do you balance today profit versus impact, and how would you measure that? Sometimes you feel like there's a conflict. Others say it's complementary. Are you profit first now at Ignia, and how does that play out?
I don't think there is a conflict. At Ignia, we very intentionally took out the terminology and marketing around impact because we've always been returns first. And I'm a strong believer that the returns are what generate the sustainable change, and they're what create new industries, and revolutionize industries. I think a lot about, to my first experience working in a nonprofit, you can't attract the best talent unless all of your motives and incentives are aligned. I mean, when I was first working in Mexico City, I was struggling just to feed myself and to pay everyone's salaries and to get it. People can't think about what else is out there unless they're being compensated according to their talent. And so when I think you have all of those incentives aligned, that is what creates great companies. Also, to build great companies, you need a lot of capital. It's all relative. So in order to draw that capital, what we saw is that we had to align incentives with returns and make sure that was front and, that was the main dialogue. And so what happened for us is that when we shifted our LP base from largely, development banks and impact investors to pension funds and family offices, we were all aligned. Our mission never changed. Ignia's mission has always been about creating and providing better goods and services to the emerging middle class in Latin America, and we do that through technology. Really, the fact that now we work for pension funds is incredibly inspiring, incredibly motivating. It's an enormous responsibility. And so the fact that we can create these outsized returns, it helps us be smarter, it helps us be a lot more agile, it helps us, really think about every decision we make and take every investment very seriously. Where we are today is that we have very much streamlined what we would call impact. We found that entrepreneurs have the hardest jobs in the world. They do not need to spend extra time nor waste resources trying to measure all the 50,000 impact metrics. And so we look at what is the one metric that is aligned with your business, it's like a core KPI to you, and that is having the greatest impact. So is that number of loans deployed, whatever it is that the purpose of their business is focused on, we measure that and that growth so we can report on it.
Makes so much sense. And when we take Ignia as a snapshot on how the LatAm ecosystem has evolved, when you came into the fund and you raised first time from pension funds in Mexico, anybody who has dealt with the Mexican ecosystem and tapping into pension funds is very hard. And then back in the day, raising 100 million. Can you maybe walk us back to that point in time and some of the kind of nuggets of wisdom that you took away from this and how you really get these pension funds on board back in the day?
One of the keys to successful fundraising is who could endure the most pain for the longest period of time. There's nothing easy about fundraising. And Ignia is a startup just as much as every other startup that we've invested with and anyone we've partnered with. And so we are out there grinding it out, hitting the pavement and telling the story and painting the vision all the time. Something I've loved talking with you about is sort of what is our job and responsibility as sort of these emerging manager funds in emerging markets. I am here and I've dedicated my career to building companies in Latin America because I see that is the future. That is really where you can create the most outsized returns in what has become a very crowded space. And I think you have to have that local knowledge and making those connections, being that bridge between understanding the local market with where the big capital is super important. But it's really hard. And I think it's been key to have the right partners. There are many moments that are extremely frustrating, and especially working with pension funds where they have so much capital. And we look at the greatest returning pension funds in the world, and they really have leaned into this asset class. And for Mexican pension funds, it's very new. It's very, I think, not well understood. And so we need to be patient to accompany them on that journey.
That's always the tricky part, I feel, when you got to educate your LPs on the asset class also as you're going, because you are one of the pioneers in the ecosystem, essentially.
We've also had to change our own reporting. It's a very, I would say, intense commitment to have them as LPs. Yet it does pay off in the long run because, again, why are we doing that? And the one thing that is so clear is the opportunity and the talent that is here. So we need to have that local capital going into the ecosystem and continuing to build. So we have to get that flywheel going. And so that's something that we cannot give up on. And I think the only way to show those investors and convince them is through outstanding returns and outside returns. And that's what we're doing today. Across all the key metrics for VC funds, Ignia is top performer, and we're the number one returners for a lot of our LPs. And when they see that, you're like, hey, look at our numbers. Like, compare us to any other investment you have. And when we can show them those results, then that is what will give them the confidence.
And that's especially when you're then graduating from an emerging fund manager in emerging markets to an actual fund manager that can show that can show DPI. But when you're just starting out as your first fund and you don't have those metrics yet, and you have a paper returns, or you have MOIC, you've got incredible multiples, but you don't get that DPI in. And DPI is like the main keyword at the moment. And you've raised a new fund just now in this incredibly hard environment where folks are still betting kind of on the asset class and betting on LatAm. How was it to get kind of that fresh capital in at this moment in time?
Well, I would say that, as I mentioned, we're always fundraising. But I think it's because we're always seeing great opportunities for investment. And so the time between our first venture fund to our second venture fund was a lot longer than we had hoped. Yet in between those years, we were raising constantly additional vehicles. So we raised, 2 growth funds, which was something new that was coming out. But because we had incredible opportunities, we didn't have capital. We had space to do our pro rata shares, and so we were able to raise those funds with our LPs. We also raised a number of SPVs, and we had a number of co-investments. So we were learning all these different ways to invest. And so with this last fundraise, I think it was more a matter of re-upping with our LPs and being able to focus again and have more fresh capital for those early stage investments that we love. We're primarily seed Series A investors. What has been new for us has been looking to find all the creative ways to generate DPI. And I think something that didn't exist before, but now is very important and very mainstream, are the secondary sales. And that for us has been key because a number of our exits were done initially through small M&As. And, those small exits, those 1.5, 2 to 3x returns, those are great. They show that what you're doing works. But those are not going to generate the returns we need for our fund, and that is not our model, right? And that's not what we're here for. So the secondary, we completed a very interesting GP-led secondary with a Silicon Valley-based secondary investor that basically reset the clock for our own time period of holding and participation with this particular company. It was a single asset GP-led deal and returned money to our LPs. It was like a win-win. Everyone loved this deal. And so we saw that happen with one company, and then now we're in the process doing it for more of our companies as well.
How did you determine whether you hold an asset or you get kind of some liquidity in there, right? Because you can't predict the future. You don't know what the markets are going to be like. You don't know what might happen. So you might as well get that early liquidity in there. But how do you determine when is the right time and how do you balance that? I find that incredibly hard to decide.
Pat, we have very few moments of influence in our job. And I think that the two most important moments is when we
Yep.
decide to invest and when we sell. Besides that, it's all sort of fluff and icing on the cake. But that's something that we have, I would say, a constant discussion around. And I think we've learned a lot in the process. Some of the early decisions for us to sell have been easy when we see the company, it's not going to be our big fund returner. And sometimes it's not our decision to sell. A lot of the times, especially if we're small investors and we don't have control and it's the founders that are driving the decision, so we're sort of along for the ride. It's important to recognize a lot of our exits are not necessarily our decisions. The ones that have been our decisions when we've had opportunity to sort of take some money off the table, we have to remember that our job is about returning capital. And I think there can be moments and times when we have taken money off money off the table, and we've taken some liquidity, give back some money to our investors. Yet, if we're not in it for the long run and we're not willing to take that ride, then we're going to have a major problem with our business model. Because the greatest returns do happen in the long run, and they're happening in year 10 and 12 of most venture funds. And so I will tell you when our funds are closed. Our story is not yet written. Again, until we fully unwound those companies. And that's a challenge of our business, right? I don't know what I'm doing if that's right. I have 3 incredibly brilliant partners. We debate constantly with each other and we try and see things from different angles. And, we all come in with our own opinions. And I hope collectively we can make the best decisions at the time. But we live in a world with very imperfect information, and we're just trying to do our
within
best.
that, I want to go meta for a second. Do you think the traditional kind of Silicon Valley VC model is even applicable to emerging markets VC investment?
Absolutely, yes. I know it's a very debated topic. And because those outside returns are few and far between, because I don't think they've yet been generated or realized fully. Remember, we're in a very nascent ecosystem here, and this is a long-term game. We built our portfolio construction, and we look at every investment as a new up at bat. We have a certain number of up at bats based on our fund size, and we have our plan. In this latest fund, we're investing $5K to $1 million in initial tickets. We save 60% of our capital for follow-on, and we need to know with conviction that every investment can be a fund returner. And we have to believe that, because if I start making bets that are smaller, more private equity style, 2 to 3x returns, I'm never going to get there. But it's hard because I've seen some great companies that I love, and I love the founders, and I want to invest. But given the entry valuation multiple, given the industry that they're in, or a number of factors, you fast forward and you're like, I just don't see it. Like the market size, whatever it is. And
It's still a story that we're waiting to fully see unfold. We touched up on it in the pre-show. This liquidity piece is critical. It's your fiduciary duty as an investor to return capital back to your LPs. That's ultimately what your job is. But what do you do when the outside conditions do not accompany you? Essentially, liquidity markets are closed, as we've seen it, over the last 2 years, effectively. And we're just waiting for them to open up again. But you got to liquidate your fund at some point in time. You got to get some E&A activity happening. Also not the most active in Latin America, let's be frank. What do we do? How do we really build this robust capital market ecosystem that we need in LatAm to get that last piece right?
I think, it's these are the moments when people are forged under fire. This is the moment that I think we have to be very smart about what we're doing and very focused. The first step has been making sure that the companies that are really that have enormous potential to generate those exits are able to survive and thrive, because I think some companies have had much longer periods of time where they haven't been able to raise capital. And so if they run out of cash, they die. Like that's just how things are. And so are we able to help those individuals, those founders, those companies that are really thriving, but might be short on cash? And so that is where our network with other investors have been very, very important. Looking at all kinds of capital, we've seen all these extension rounds, or making sure those companies are able to survive. In our experience, our best companies, thankfully, have been very well capitalized. It's a matter of waiting out the market, because the great companies have great products, great consumers, right? So they've just been getting better during this waiting period. They've been able to really refine their metrics. I love it when teams get lean and then they get more efficient and they generate more sales, but everything's better with half the team or a fourth of the team. You're like, what happened? And people just get better and smarter. So that's one thing, is helping them wait out the time and then get there. The second thing I think is super important is communicating to our investors and making sure that everyone knows what's going on and making sure that we're being transparent with our own expectations. That is what I think is the core alignment. None of our LPs invested in us expecting a quick exit. And I think that's also super important, is that understanding that the people that invest with you, this is not for the faint of heart. This is a long-term game, and having that patience to really wait for those big exits, because they will come. I know we're sitting on election week. This is not about talking about politics at all. However, I think that now that we have certainty in the political space of our world, I think that we'll see the next year, 2025, will be focused on everything else that has been on pause. And so I am very optimistic that we will start unraveling the sort of huge lineup of companies that are ready to exit and have those IPOs and sales. It will come.
What you were saying there on like setting the expectations is so critical, that you keep your LPs in the loop, that this is a long game, it's multi-vintage, it takes time, and you're building the ecosystem together. And I wanted to kind of look at the flip side, not just the ones that are surviving this and producing the returns, but also the other ones that are not. And I always wonder sometimes that like our refreshment rate in the ecosystem in LatAm is not fast enough. So that of like companies failing and then starting again, like this is what you see in the US, this mentality, and me as a European, like Europeans don't have that, in my opinion, is like that dynamic, creative, destructive forces of capitalism at work. And I wonder, have you seen a change over your time in the LatAm ecosystem that this refreshment rate is now accelerating? Like, I would rather see more failures and then folks going at it again, fresh, instead of hanging in there and then being a zombie company that's going to be a nice lifestyle business, but it's not going to produce any venture returns. Let's be frank.
Well, I look at what are the things that we can measure. And one of the things that has been very apparent to us is just the quantity of repeat founders. A few years ago, that was less than, I think, 20%. And now we have more than half of our founders that are receiving VC funding are repeat founders. And so that means that they had to have failed or succeeded or done something beforehand. And that is changing at a very fast clip. And there are certainly startups that are closing. We're seeing the news about it. We typically don't hear about all of them. I wish we could measure that, that pitch book could say, I know they try to do this. I know companies are closing, and that's fine. I mean, it's tough, but that is what we need to have happen to really filter through the noise and get to the best companies. Because not everyone's going to have a huge IPO or a huge exit. I think that's very promising. It's also promising to see that I'm a huge proponent. I've been very much working to get more women in this industry, not only as investors, but also as founders. And if we look at that's something that is being measured now. And the latest numbers came out, and they have around 20% of the VC-backed companies have a female founder. That's huge. That didn't happen before. So this is just showing that being a founder is a much more acceptable field industry. It's a greater aspiration than we've ever seen before. The metrics are also there about the quantity of engineers that are coming out of schools in Latin America, particularly in Mexico and Brazil. And so this is something that the global technology companies know. They're hiring here, but now we're beginning to see those sort of rappy mafias who are the people that are coming out of all the great startups to then go start their own companies. And I think those are really powerful flywheels that we're seeing happening with talent that has fallen through the cracks with previous startups.
So excited for the next phase of this. What are some of the business models that you're excited about kind of going forward?
Well, there's so much going on right now. And I think that what's interesting is that while we're always looking at trends and we're always trying to understand what are the themes in the market, at the end of the day, we're investing in individuals and founders and their opportunities that they're creating. And they have not changed greatly since Ignia has been around. And what I mean by that is, let's take the largest one, which is fintech. There are now so many fintech funds, which is fantastic, like really smart fintech investors. There are global funds coming to Latin America. There are all these great stories. Yet it is still a huge area for investment opportunity. You have to slice it down into much smaller industries to fully understand it. It sounds kind of boring when you're like, oh, I'm still investing in fintech, been around for a while, but there's still incredible opportunity, sort of within that. What are the particular spaces, that would be most interesting within fintech that is just entirely underserved still is the
Right.
SME financing gap. Such a huge part of the Latin American economy. They talk about 70% of SMEs still lack
Yep.
access to credit, into financial institutions. We recently have been working with an incredible founder.
Hmm.
He's leading a company called Contempo that's focusing on B2B payment solutions for the industrial sector in Mexico. So
Yeah.
again, like highly unsexy industries. I mean, they are dealing with real heavy industry and they are trying to modernize the trade credit for one of the most important segments in the Mexican economy. And so they're addressing, thousands of these businesses that their growth has been, 10x year after year, and they simply cannot get enough financing into the system, right? And this is dealing with all the macro trends that we're seeing, with nearshoring and everything else. But it's really a technology solution because the way that he's able to service these companies is exceptional, and their embedded payment platforms. At the end of the day, it's taking great talent, great vision, serving an enormous market. I continue to be very excited and bullish about that sector and opportunity. And then, of course, everything is putting AI into
Yep.
every one of our companies. It's just like the rate of change is just so exponential. It's really exciting.
Exciting to see that play out, especially the AI component as it becomes a feature. It's maybe not going to be the core business model or the core product of a LatAm tech business,
Yeah.
but it's certainly going to become a feature.
Generating all of that deep tech, what they called before, innovation from Latin America. But those technologies can certainly be applied in Latin America.
So there's 3 questions I'm asking everybody on the pod in a fast speed round. Are you ready for those 3 questions?
I'm not ready, but I'm happy to give it a go.
The first one is, who's an entrepreneur you admire and why?
Santiago Sosa, who's the founder of En the Nube Nubem Shop. And why? Is because I have seen him change and evolve as an individual and overcome some of his greatest obstacles by being a thoughtful listener and learner, constantly learning. This was an incredibly brilliant engineer who really had to work on how to talk to Silicon Valley and tell his story, and an introvert become an extrovert when called on. And he's done a beautiful job of this and building an incredible company that is transforming Latin America.
Second one, what's the best piece of advice you would like to pass on to others?
So I got this advice when I was pregnant with my first child. Everyone gives you advice. You just have to listen to yourself. Pick your one piece of advice and go with that. And that goes with, when you're talking with a pediatrician, they will tell you one thing, another pediatrician will tell you the complete opposite, and you just have to listen to your own voice. There's so much noise in this. And understanding that whatever you choose is going to be okay, because we're working in a world of imperfect information. We're never going to have that information, so we have to get very comfortable with the uncomfortable. That's just been a theme through everything I do in venture. We're living with a daily uncomfortable nature of lack of information and clarity. And we have to be really good at sitting in that and making decisions in the midst of that maelstrom.
This is such a great piece of advice. There's so much noise out there, and there's sometimes too much information, but then we still lack information. So how to accommodate that is critical. You just got to trust yourself and trust your instincts sometimes.
But you just got to pick your lane. I think you just got to pick your lane, make the decision, and then be open to listen. So much of this is that, we have to be agile. We ask this of our founders all the time. You have to constantly be iterating. You constantly have to be thinking about how to improve on what you did. Pick your lane, make your decision, go with it, and then be open to say, oh, maybe that was wrong. Maybe that was a really bad decision, but be open to trying to fix it. But at the end of the day, we have to just, trust ourselves and move forward.
What are 3 keywords that define a successful business, in your opinion?
Number 1, impactful, game-changing, really revolutionizing people's lives. Inspirational, resilient. And can I throw in fun? You gotta have something that you love to do, people love to work in, and you know what you're doing, brings you joy. We're not
Agreed.
here to suffer every day and grind it out. Great companies, people love to have fun in.
Otherwise, you're not going to have the energy for it anyways. You need to enjoy it. It's going to be so hard. You might as well have a little bit of fun. Otherwise, it's just crushing. I love this, Christine. It was such a pleasure having you on the pod. Is there anything else you would like to share with the audience before we close?
It's incredible that you're elevating the opportunity of everything that's going on in Latin America and just telling stories, because again, this is all about the people behind the business. And that's why I've been so inspired to work with founders and be in venture for the last decade plus. So thank you for telling the stories. It's really important work, and it's been also a lot of fun talking with you.
Thank you for listening to the Enthusiast Podcast. Make sure to subscribe wherever you're getting your podcasts to always stay up to date with the latest episodes. And if you enjoy the work we are doing, drop us a review or give us a rating. This show is produced by me, Patrick Alex. Also, a big shout out to Constanze Ulreich, who is leading our newsletter efforts, and much more. Title music by Stock Studio called That Funk Show.